Welcome to the Kappa Model. This is my full New York session scalping framework built specifically for futures. I trade strictly the New York session, focusing on MNQ, MYM, MES, and MGC. Everything I'm about to break down structure, liquidity, fair value gaps, SMT is the same exact process I run every single day on stream. This isn't a theory, it's not some copy and paste YouTube strategy. It's how I actually catch my setups live in real time every morning. So if you're new, this is your foundation. By the end of the video, you'll understand how I find bias, where I take my entries, how I manage risk, how I keep my trading mechanical, no emotion, no guessing. While I'm talking, watch the chart. I'll walk you through examples as we go. Take notes, pause when you need to, and really understand why each step matters. Before we talk setups, let's talk mindset, because trading is way more mental than people think. You can have the cleanest model in the world, but if your emotions run the show, you'll never see consistency. For me, it's simple. I treat this like a business, not a gamble. Every trade has risk attached, zero point 0.6 max. I don't care if it's the cleanest setup of the year, I'm not risking more. Why? Because once you respected your risk, you stop chasing every candle. You stop revenge trading. You stop thinking you have to catch every move. Consistency doesn't come from being right. It comes from sticking to your process. And when it's boring, when it's slow, when nothing's setting up, and the truth is, most traders lose because they want excitement, not consistency. But the markets don't reward excitement. They reward patience and execution. Every morning I go through the same routine. Pre-market prep, mark my key zones, journal day before, and wait. If my model doesn't show up, I don't force it. You'll notice as we go through the boot camp, I don't chase trades. I wait for confirmation. That's the difference between guessing and trading with intent. Remember, your mindset creates your system. Your system doesn't fix your mindset. Lock that in before we go deeper, because from here on, we start getting into the technical side of how I actually build bias and find my setups. Now, let's talk structure, the core of the Kappa model. Everything starts with understanding market direction. If I can't define bias, I'm not touching a trade. Now, look at the chart. We have a clear uptrend, higher highs, higher lows. That's bullish structure. When that breaks, when we get a BOS or a MSS, that's my cue that algos flip bias. I don't guess the top or bottom. I wait for confirmation. Structure tells me where I'm playing, not when I'm entering. So I'll mark the swing high, swing low, identify the break, and then wait for price to come back and test that shift. That shift is structure, is my confluence. The market just told me which side is favoring. Next up, liquidity. This is where most retail traders get smoked. Liquidity is just fuel. It's where orders sit. My job is to see where stops are hiding and wait for price to clean them before I take my setup. So before New York Open, I'm already marking out liquidity. Yesterday's highs, yesterday lows. Then I watch for a sweep. If we take liquidity and shift structure, that's my second major confluence. You see on the chart, price sweeps a low and instantly breaks high. That's the trap that you get caught in. I'm never entering into liquidity. I wait for it to get hunted, and that's when you catch those clean reversals everyone else calls random. Liquidity gives you context, structure gives you bias. Together, they give you timing. Now, once we got structure and liquidity in line, I'm watching for a fair value gap. Those little inefficiencies that price loves to rebalance, when the market shifts one direction, it almost always leaves an imbalance. That's where I want my entry. Look at this example. We swept the low, break down, leave a gap, price comes back, taps into that imbalance, and moves away. That fill is my entry. The reason why I love FVGs is because they give me precision. I'm not chasing. I'm letting the market return to a fill inefficiency. But remember, a FVG means nothing without context. It has to align with structure and liquidity. That's how I keep my trades mechanical. One, two, three confluences stacked before I even think about an execution. Next confluence, a SMT or smart money trap. This one catches people slipping when correlated markets like MNQ and MES stop moving in sync. That's a divergence. An example, MNQ makes a new high, but ES doesn't. That tells me buyers on MNQ are trapped. When I see that, plus a liquidity sweep and a structure shift, that confirmation stacked, SMT isn't a signal by itself, but confidence boost. A subtle way to read what smart money is doing in the background. Watch on screen. MNQ pushes higher, ES lags, and we break down. Textbook SMT reversal. I use that to time my entries tighter, especially during the 8:30 and 11:30 window when volatility spikes. Now, I know that was a lot of information really fast, but let's lock in. We're almost there. Let's talk about risk, because without the part, none of it even matters. I risk 0.6% per trade max. That's my cap, no exceptions. I don't size up until I build a profit cushion. If I'm cold, I size down. I don't chase it back. Once the trade moves in my favor, I slide my stop loss to break even. That's how I stay consistent. This game isn't about hitting home runs. It's about not blowing up while the market prints setups every single day. I'd rather take three small wins and walk than one hero trade that wipes my week. Now, with profits, I scale partial at key levels, usually the first liquidity zone in my direction that locks in a cushion. After that, stop loss goes to break even, risk is off the table. If the market structure supports continuation, I'll trail. If not, I'm done. The key here is consistency. You don't need 10 trades. You need one clean setup that fits your model. All right, I know that was a whole lot of information to take in, but if you apply it all, this is how it all ties together. Pre-market, I'm marking my levels, liquidity pools, FEGs, key highs and lows, S&T zones. Once I have them all marked out during New York session, I'm patient. I wait for the liquidity sweep, structure shift, and fair value gap alignment. Once it's there, I execute. No hesitation. My rules handle the rest. Post session, I journal structure, confirmation, emotion, and mindset. That's how I refine the model every day. Data builds confidence, and confidence builds precision. Everything I just broke down structure, liquidity, SMT, execution is all built into my indicator. You can learn more joining our Discord. And that is all. I hope y'all learned something. And I really want to thank Decrypt for giving me the position and the opportunity to provide my knowledge to you. Kappa out.